Besides pro rata reinsurance, another type of reinsurance is excess of loss reinsurance, sometimes referred to as non-proportional reinsurance. In this lesson, we'll talk about how to calculate the amount that the reinsurer would cover for a loss, and we'll also go over several variations for how excess of loss coverage is applied. Under excess of loss reinsurance, the reinsurer will provide a partial reimbursement for whatever losses exceed a certain dollar amount. This dollar amount is referred to as the attachment point, and everything above that would be eligible for reinsurance coverage. The primary insurer is responsible for any loss payments up to the attachment point, so in that way it is very similar to a deductible or a line amount. For the portion that does exceed the attachment point, that actually gets split up between the reinsurer and the primary insurance company. So it's not like the reinsurer covers everything above the attachment point. For the portion that is eligible to be reinsured, the portion that the primary insurance company has to pay is referred to as the co-participation provision. Having this provision gives the primary insurer an incentive to carefully control the costs of the claim. If there was no co-participation provision, then the primary insurer wouldn't care how expensive the claim gets after it goes past the attachment point. Now, the policy terms for an excess of loss agreement are usually expressed in shorthand, where it says a dollar amount, and then the letters XS, which stands for excess, and then another dollar amount. The first dollar amount tells you how much of the claim is eligible for reinsurance, so it refers to this portion above the attachment point. If, for example, the first blank said $100,000, that means the first $100,000 of the claim that goes over the attachment point would be eligible for coverage under the reinsurance policy. The first dollar amount also represents a maximum amount, so any portion of the claim total that goes above this dollar amount is not eligible for reinsurance coverage. So the primary insurer would have to either pay this remaining amount themselves or get another reinsurance policy to take care of the stuff above this point. The second number in the shorthand label refers to the attachment point, so that's pretty straightforward. In our example, let's say the attachment point is $50,000. If you put all of this together, then the label is basically saying up to $100,000 is eligible for coverage in excess of the $50,000 attachment point. But don't forget, an excess of loss policy usually has a co-participation provision, so the reinsurer isn't necessarily going to cover the entire $100,000. If, for example, the excess of loss reinsurance had a co-participation of 30%, the primary insurer will have to pay 30% of the loss, and the reinsurer will only cover 70% of the loss. To illustrate how this would play out with an actual example, let's say the primary insurer has a reinsurance policy with these terms: $100,000 excess $50,000 with a 30% co-participation. This means the reinsurer will provide coverage for up to $100,000 of the claim value that's in excess of the $50,000 attachment point, subject to the 30% co-participation. Now, if the primary insurer had a policyholder that experienced an $80,000 loss, only $30,000 of it would be eligible for reinsurance because that's the portion that exceeds the $50,000 attachment point. Of that $30,000, the reinsurer is only responsible for 70%. So the reinsurer would end up paying $21,000, and the primary insurer would be responsible for the other 30%, which comes out to $9,000. But remember, the primary insurer is also responsible for everything up to the attachment point, so they'd also have to pay the first $50,000 of the loss. That means the total portion that the primary insurer has to cover is $59,000. Let's try another example where the total loss amount exceeds the total amount that's eligible for reinsurance. If the loss was $160,000 instead, only the first $100,000 above the $50,000 attachment point would be eligible for reinsurance coverage. Of that $100,000, the reinsurer would pay 70%, which is $70,000, and the primary insurance company would have to pay their 30% co-participation, which comes out to $30,000. Of course, the primary insurer is also responsible for the first $50,000 up to the attachment point, as well as the last $10,000 of the loss that exceeded the $100,000 portion that was eligible for reinsurance. If you add everything up, the primary insurer would be responsible for $90,000 of the loss. Now, there are a few things worth noting about how this type of reinsurance works. Unlike with pro rata reinsurance, the total claim amount does play a huge role in calculating how much the reinsurer would owe under an excess of loss policy. In addition, the percentage of the claim that the reinsurer ends up paying for does vary a lot depending on that claim amount. So even though the reinsurer is only paying for 70% of the eligible portion, that doesn't necessarily mean they're paying for 70% of the entire claim amount. Now that you know the basics of how excess of loss reinsurance works, let's go over some of the most common types or variations of excess of loss reinsurance. The first variation is called per-risk reinsurance, or property per-risk reinsurance, since it's typically used for property coverages. In this variation, the attachment point and reinsurance limit apply separately per loss and per risk or loss exposure. So for example, for an auto insurer, the attachment point and reinsurance limit might apply per loss to each vehicle that the primary insurer is providing coverage for, since each car is a separate exposure. The primary insurer would define what constitutes a separate risk or risk exposure, and all the reinsurance terms would be expressed as dollar amounts. The second variation is catastrophe excess of loss reinsurance. This is when multiple exposures suffer a loss from the same catastrophic event, and you have to add all of those losses together to get the total amount before you apply the attachment point and the reinsurance limit to the entire catastrophe. This type of coverage protects the primary insurer from a big accumulation of losses that arise out of one major loss event. Another variation of excess of loss reinsurance is per occurrence reinsurance. This is when the attachment point and the reinsurance limit apply per loss occurrence no matter how many policies or exposures are involved. So it's very similar to a catastrophe excess of loss policy, except on a much smaller scale. To give an example of this, imagine a claim where a passenger gets injured from an auto accident. That passenger might be able to make a claim against multiple policies from the same insurer at the same time. Like they might seek an injury settlement from the driver's policy, the car owner's policy, the other driver's policy, and maybe even their own policy. This variation is often used for liability coverages, and the attachment point will be lower than whatever is the highest policy limit that the primary insurer sells. The last variation is called aggregate excess of loss reinsurance. This is when the reinsurance applies once the primary insurer's cumulative losses or claims altogether exceeds the attachment point, as long as it's still within the reinsurance agreement's effective dates. The attachment point is often expressed as a dollar amount, but sometimes it is expressed as a loss ratio instead. If that's the case, the reinsurance policy would be referred to as a stop-loss reinsurance policy.